I'm here today to talk about Octane Capital's refurbishment proposition and a solution that we offer clients who are looking to add value to their existing properties by way of carrying out refurbishment. So, in a market with such uncertainty, borrowers are looking to create value into their properties, and instead of selling them, they're looking to then refinance them and hold them, generating a higher level of income. And they can do that by, converting their properties into HMOs or extending their properties or extending into the loft and so on and so forth. But of course, that costs money. As a lender, we're quite happy to provide funds towards the acquisition of that property or perhaps the refinance of that property so that we can take a first charge. And then we're quite happy to fund 100% of the cost of the works going through the conversion throughout the term of the loan. From a propositional point of view, we can do this on 100% residential properties. We can also do this on semi-commercial properties. So if someone has a property that happens to have a shop or retail on the ground floor, but they want to do some work on the flats upstairs, we can accommodate that too. A minimum loan is 150,000, but regardless of that, we're quite happy to lend up to 70% of the value of the security day one, so that can be used to purchase that property or repay any existing debt. And that's 70% net, so we only have the fees to come off of that, and interest is rolled on top of that, plus 100% of the cost of the works. Now, as long as we don't exceed 70% of the end value, we're quite happy to fund 100% of the works and 70% day one. What you tend to find is with most refurbishments that are suitably profitable for the borrower and for the lender, at 70% day one plus 100% of the works, you're going to come out at around 65% of the GDV. And the good news is that our proposition is priced based on loan to GDV, not loan to value day one. So if the loan does come out at 65% of GDV, it's priced at 65%, and if it comes out lower, it's priced accordingly. As with Octane Capital's proposition, the fees and pricing are completely flexible and dependent on circumstances. We apply the rate according to carrying out refurbishment, but on this kind of arrangement, the cost can be somewhere between 0.7 and 0.9% a month, depending on loan to GDV and the proportion of the fee that is paid away to you, the introducer. We're quite happy to deal with extensions to the property, loft conversions, converting properties into HMOs, house of multiple occupation, or even converting an office into resi or perhaps a large house into multiple flats. Looking quickly at a scenario for a deal that we carried out for Impact, we had a client who had a UK company, very experienced guys, they'd done this on more than one occasion, but their equity came from overseas investors. So it adds a slight complication to the deal that there's money coming into this deal from overseas. But Octane Capital were very comfortable, able to get very comfortable with that. The property was a vacant property in SW19 and actually uninhabitable. So no way that anybody could get a mortgage on this property because it had to have work done to it even before we could get to that stage. The purchase price was $402,000 and the cost of the works to get this property where they wanted it to, which included a loft conversion, was £106,000. But the end value of the finished product was $650,000, and our borrowers would look to sell this property by way of repaying Octane Capital. So on day one, we were able to provide a loan of 70% of the purchase price of $402,000, that was $281,000, and happy to fund 100% of the £106,000 worth of works. We charge a 2% arrangement fee and there are no fees to come out of this loan, so if the work is finished early than the 12-month term we gave the borrower, they will only pay interest up until the day we're repaid. Of the 2% fee, we pay 1.5% of that fee to Impact. As I say, there was a 12-month term, and the rate on this loan was 0.79% a month. So, as the loan progressed, the borrowers get into the property once it's purchased, and they start to do work. And Octane Capital, we fund the work in arrears. So what that means is that the first sort of 20% of the cost of works are incurred by the borrower. Normally, with people that are experienced and they have contractors, the cost of works will be carried out on account. By the time those first set of works are finished, Octane Capital will send an asset manager over to the property, meet the borrower there. The borrower would have the opportunities to show the asset manager what work's been done, share the invoices. That information comes back to Octane Capital, and within 24 hours, the first tranche towards the cost of works is then released directly to the borrower. The borrower then uses that money to reimburse the contractor, and it goes on, so on and so forth, perhaps 3 or 4 further tranches until 100% of the works have been funded by Octane Capital. In this example, after just 1 month, the borrowers had carried out quite an extensive amount of works. Our asset manager went along, took some photographs, took the details of the invoices, and the first tranche was paid out within 24 hours. So that kind of deal is very, very common at in the market at the moment. And as I say, those borrowers that are looking to enhance the value to their existing portfolio by increasing the level of income or the yield to that property is a very, very good solution in a market which carries so much uncertainty at the moment. And Octane Capital would be delighted to help any clients who are looking to operate in this field. Thank you for taking the time to listen.